Okay, the next point I'm going to get at is finding an edge. This one, I'm going to try and keep it into 5 minutes, but this is very, very important, and I will tell you how to do it. So, I've given you the key strategies, right? There's loads out there you can do. There's loads of different traders out there that trade very differently. I don't personally use indicators, but loads of people use indicators, moving averages, you know, all these different crazy things. And if people are making profit in their own way, they make a profit in their own way, right? But the main thing you need to work on is finding your edge, okay? Right, and that's the big question, because ultimately, I'll give you those trading techniques. If they worked all the time, everyone would be millionaires, right? But the reason why they don't work is because people don't find their edge, and you need to have an edge in trading. So how do you do this? You have to look at variables, okay? So you find your trading pattern, you know that you like to trade. For instance, let's have a go on, you like to trade trend lines, right? So how are you going to find your edge? Because everybody else is looking at the same 4-hour or daily trend line, right? How do you find your edge? What you do is you go through for the next, you go back 2 or 3 months, you pick 2 or 3 pairs that you want to get used to, and you understand how they move, right? First things first, people who have got 10, 15 different pairs, you're never going to get it, because you need to have 2 or 3 pairs, because you need to know the behaviors of those pairs. You need to know in your mind, well, we're on an uptrend, or it's weird, for the last week we've actually not moved anywhere. And you're not going to be able to do that if you're trading with 10 different pairs, right? So the first thing is find 1, 2, or if you want, you know, if you can handle it, 3 pairs. All right. Part 2, I've completely messed that up, so I've lost where I fucking was. What was we even talking about? Finding the edge, right? Okay. So you got your 3 pairs, and you're now going to go back over 3 months worth of data, right? And every week you are going to find where your strategy hit. What you're going to do is you're going to screenshot it. You're going to screenshot it on the 4-hourly chart. You're going to screenshot it on the 3-hourly chart, the 1 or the 15 or the 5, and try and collect data. Then you're going to open up an Excel sheet, and you're going to look for things that you can see that's happened. So it might be, for instance, if your edge, the part of your edge that you're looking at is the entry, right? So what you might say is, okay, every time it's happened twice a week in this pair, right? Or once a week in this pair, for instance, over the past 3 months. So you've got 12 different trades to look at, 12 different pieces of information. And then you're going to look at all those different screenshots and try and compare them and try and find out where things were different. Then you might put them on your Excel sheet and find out where your entry, so your entry technique, or what time of day did that happen, right? Okay, so that's one piece of information. What day did it happen, right? Okay, that's a second piece of information. It might be that, for instance, if you're trading a Canadian dollar pair, it's linked to oil very well. So you might say, right, okay, well, looking at that pair, US dollar CAD, and also looking at oil, what I noticed was that on a 4-hourly bar of oil going up, I noticed that Canadian dollar against the US dollar would be going up as well. That might be another piece of information. So you've got time, you've got day, you've got a comparable pair to go against it. What you're going to do is you're going to start having all these different little pieces of information, and only through your own analysis of that pair will you find your edge. Because after a little while, you'll look and you'll go, well, actually, out of the 12 trades, right, only 3 of them, the three of them that worked really well, those 3, this happened. Or I noticed that it was on a Wednesday at 8 o'clock in the evening. Between 5 and 8 on a Wednesday, this usually happens. And what it does is it reaches for usually the previous day's candle. And that is when you find your edge, because you'll notice. And then when you see it, you'll think, fuck, right, let me look on other pairs. And then you look at your other 2 pairs. Right, okay, I've noticed on those pairs, these things do it at this time, right? It might be on the 3rd week of the month. Something random, right? But all this information is what you can look at. So you might look at the weeks and look, well, okay, the 1st week of the month, usually nothing really happens. All right, the 2nd week, nothing really happens. But the 3rd week of the month is where a majority of my trades happen. Now you're starting to zone in on your edge. You're starting to cut out all of the trades and try and focus on the ones that work 80, 90% of the time. If it happens 2 or 3 times, if it happens once a month, on 3 different pairs, but you're getting 5R, you've circled it down so tight that you can get your stop loss really tight, right? That, or you know something expansive is going to happen, right? What you're risking 2% because you're confident in it. You're getting 3R, say, so that's 6% over 3 trades. That's 18% a month. I told you before, if you target 10% a month, that's massive. If you're hitting 20% a month, and then through that edge, what you'll find is that you don't trade as much because you know, and you've gone back and you've got the history there that this is going to work. So finding your edge, right, is all about you. What works for you? What does your eyes see? What have you found that's different to other people? And if you don't find that acute little edge, you might do well, but I just think it's too difficult. If you've not got your own personal edge, it's really difficult to do well. You might take things slow, I don't know, but I think an important part is to find the edge and make it specific to you. I can't teach you an edge because my edge is for me, not for you, specifically for me, for my type of trading, set up for my type of emotion. I don't like long-term trading. I can't do it. I can't swing trade. Why? Because I know that at night time I'm thinking, fuck, is it going up? Is it going down? You have to hold trades over the weekend. You can tell I just don't like it whatsoever. So I focus my edge on day trades, a couple of hours, right? And that might mean that I'm only making 1R or 2R, but I know that I can do it 2 or 3 times a week fairly confidently looking at certain things. It could be that you wait for a level, you wait for a bullish 4-hourly candle, you get in at the end of the 4-hourly candle, and you get out at the next at the end of the next 4-hourly candle. And you've worked out from your analysis that actually that works 90% of the time, right? All right, you're not making 2 or 3 or 4 R's, you're making 1 R. But if it's working 90% of the time, yeah, and then from that, and this is how you find your edge. So you got your trade, wait for it to find a level, you wait for a bullish 4-hourly engulfing, you enter at the end of that candle, stop loss goes below the candle, you get out at the end. And then you zero in and find your edge on that. Right, okay, we're looking at the last 12 trades that I've found. I've noticed that once the price pulls down and then pushes back above the original 4-hourly candle, not very often does it actually come back below the previous low within the 4-hourly candle that I entered on. So what I now know is that if I wait for the 4-hourly candle, I wait for it to pull back, and then I enter on the 5-minute chart, as soon as we break the 4-hourly candle, and I put my stop loss below the swing low. Now you've got a really tight stop loss, and you target at the end of the 4-hourly. So now you've gone from maybe a 0.6 R or 1 R, and when I say R, I mean risk. So if you risk 2% per trade, then you made 1 R, which is 2%. If you made 2 R, that's 4%, 3 R, 6%. So now all of a sudden you've zeroed in and found your edge, and you might be getting 2 or 3 R out of that trade, right? We only need to do 1 or 2 of those a week. Imagine if you're getting 3 R on that and you're hitting 2 of those a week, right? And you know it's working 90% of the time. You can be a lot more, right? So that's 6% per trade. So 12% profit. That's over nearly 50% profit a month. Just on that tiny little thing that you found. And that stops you from over trading. It gives you your edge. It makes you a lot more acute in terms of, not going, oh, I'll trade on that, or that looks good, or, specifically that's what I'm looking for. And I'm only looking for it in 2 or 3 pairs or 2 pairs. You don't need to be looking at 15 pairs. If you've got your edge, all you need is your edge on 1 or 2 pairs, and then you just zero in on that and execute it each time. So hopefully this will help you understand how to find your edge, how to develop your edge. And it's continuous, right? It keeps going on and on and on. If you're not working on your edge, somebody else is working on your edge. So that's the way you need to look at it. It's a continuous puzzle that's forever changing. But ultimately, if you find something that's fractal and it works, just give it some time, play it out, use risk management. I hope that's helped with finding your edge. There's a lot of work to do, a lot of analysis, but once you've found it, sweet man, you're on to a winner, and you're about to begin your career as a successful trader. It's come up to 10 minutes, so sorry about that, but I thought it was quite important.